Welcome back to Kaz's Corner. I'm your host, Adam Kaznick, Senior Wealth Manager with Convergent Financial Partners. Hopefully you are back for another episode. If this is your first one, welcome. And if you have not seen a previous episode around the 5 things you should know before going and meeting an advisor like me, check that one out, hit pause, go watch that one, come back, listen to it, and then we'll pick up right where we left off. So today we are going to discuss what are 5 questions that you need to ask someone like me when you walk in that door, right? You've already done your homework. You've already figured out, okay, I've got my parameters. I've got my financial picture. I've thought about where I want to go and what my goals and dreams are. But now you want to start interviewing, right? It's matchmaking time. Let's figure out and find the right advisor and the right firm for you. So first question you want to ask your advisor, first and foremost, is what type of clients do they work with, right? I love this question. I want people to ask me. I will explain it to them when I sit down with them, because most advisors and most financial planning firms have an ideal client profile. And the reason why is because they do the best work for those types of clients. They spent the most amount of time researching those types of clients. They figured out the best types of strategies that work with those types of clients. So you want to know, am I talking to the right firm that matches the type of client that I am? So ask that question and find out what is their ideal client. What are the types of clients that they work with to make sure that your financial situation, your goals fit within their ideal framework. So that's the first question to be prepared for. And when they tell you, then you can figure out, are they looking at the type of household that I have right now? Are they working with people that are maybe in a lower tax bracket, higher tax bracket, more complicated tax bracket? We want to make sure that those are aligned. So that's the first question to ask is, what is your ideal client and what type of clients do you work with? The second is, what type of services do they offer? And this could be a little bit complicated, so I want to make sure that you get this background before you go in. So the types of services really fall into a few categories. The first is going to be insurance or risk management services. So do they have proper licenses to act as an agent on your behalf in dealing with insurance companies? Also on the investment side, are they registered to provide investments for you? And in that category, there's a couple different types. They can be advisory type of investment accounts. They can also be brokerage, where it's more of a transaction-based. Advisory is more of a assets under management. You may have heard seen different commercials of, we do better when you do better. Basically, that means is they're charging a fee based off of the assets that they're managing for you, the amount of assets that they're managing. So that's the second, I should say, types of question you should ask is, what services do they provide? The last is sort of financial planning and consulting services, which kind of feeds into the third question, which is, how are they compensated? This should be a question you should feel very comfortable asking. It should also, more importantly, be a question that the advisor should be very comfortable answering. So definitely ask this question. Maybe not the first one that you start out with, but definitely ask as part of it and take some notes, because there will be some differences between the advisors you speak to. And I'm going to give you kind of a rough overview of what you'll run into. So the first type of category that maybe you've heard before is a fee-only advisor. And a lot of advisors out there are promoting this because of a few reasons. One, they follow what's called the fiduciary standard. Arguably, this is the highest level of standard that financial professionals follow. And essentially what it means is they will act in your best interest at all times. Sounds great. What are the cons to that? The con is going to be is you're going to pay a fee, usually an ongoing fee or a very high upfront fee for that type of relationship. Doesn't mean it's a bad thing, but it just means that it's going to cost you to be able to have that type of relationship. So you want to be prepared for that and be very comfortable knowing what that fee range is for those fee-only advisors. Now, within that category, fee-only advisors may also have a AUM fee, an assets under management fee. This, again, as I mentioned, just means that the amount of money you invest with them, they're going to take a fee, annualized fee off of that. As those assets grow, so does their fee. Their fee percentage may drop a little bit, but they're still going to be making, a large amount of money with the more money that they are managing for you. Now that puts us on the same level. I operate this way with my clients when I'm managing money for them, but I am not a fee-only advisor. I also I work under a fee-based relationship. And I'll come back to that too after we touch on the second category. So the second category is commission-only advisors. This is going to be your most traditional. This has been around for the longest amount of time. And this is, as it sounds, I would make a commission off of selling a product. This is where insurance agents fall in. This is where sort of old school brokers, that are buying and selling stock, maybe the Wolf of Wall Street sort of movie that you have in your head. That's that old school broker. They don't make money unless they make a sale, and they're making a percentage off of however much you're investing. Doesn't mean it's a bad thing, but I would say it's going to fall into the category of you better know what you're looking for, what product or service you're looking for, and go and find maybe those experts that work in that area. Doesn't mean that they're any better or worse. You just want to make sure that you understand what sort of standard they're following and how they're compensated. As I mentioned, I operate personally as a fee-based advisor. What that means is it's a hybrid of both. I can get paid off of products that I place for clients in the insurance space. I also get paid off of a financial planning model where somebody's paying me to put together a financial plan, create action steps for them, and have a engagement with a defined amount of time, as well as also a assets under management fee. So I work as what we would call a dual registered relationship, where I follow both of those kind of standards and compensation models. Next question that I would ask is have a clear understanding of what is the cadence of communication, right? How often do you expect to hear from the advisor? How often is the advisor planning to reach out to you? Make sure that you're all aligned on that. There's been some funny stories of where I've spoken to different advisors and clients where they've taken out a term life insurance policy and they expected to hear from the client every single month. There's really not anything to review on your term life insurance policy. You pay your premium, whether you're paying monthly or annually, doesn't matter. Nothing's really going to change for the length of that term. And, you just want to make sure that you're not having super high expectations for that advisor who's like, I'm going to get you that life insurance policy. I'm going to find the best policy for you with the best premium and the one that's, the best suited for you. But then they got to move on and find somebody else. There's really not a lot of ongoing maintenance versus the flip side where some advisors and some clients' expectations were way off, where the advisor was going to reach out to them maybe monthly or maybe quarterly to review their investment accounts. And the client was like, look, I thought I was giving you my money so I don't have to think about it and I don't want to hear about it. Now, I will say, though, is that there is a minimum of you do need to do a review with your advisors at least once a year. That's an industry standard regardless of the type of advisor you're dealing with. So you should expect to at least hear from them once a year. I would say my standard is 2 at minimum, and then it goes more frequently than that for some of my clients that either are paying me a fee to do so or have certain types of investment accounts that we need to review them more frequently. So hopefully that gives you kind of a good perspective, but definitely cadence of communication. Good to talk that out, right? You don't want to get into a relationship with somebody and not know how often you're going to hear from them. The last question that I would ask is the time frame of the engagement. So again, expectations. If you buy an insurance policy from an advisor or from an agent, you may not hear from them all too often aside from just maintaining that product, maintaining that tool. Think about it as a tool, how often it needs maintenance, like taking your car into an auto shop. You don't need to talk to that mechanic every week to make sure the car is running okay. The flip side of it is on the asset management side, that is an ongoing relationship until you decide to move the account. So you want to make sure that cadence again, but also that expectation of the engagement has the correct time frame for you. Now, when you're dealing with a financial plan, this is where you're going to see some variability. I have clients that have a 3-month engagement, 6-month engagement, or a 12-month engagement. And it really just kind of depends on how complicated their situation is, how many action steps we've created for them, how far they want to move. Some clients are really methodical. They want to move at more of the tortoise pace. Some clients we want to move it like a hare. We want to go fast. We want to make a lot of changes. They're fast moving. Maybe they're business owners. So we want to make sure that we understand how long that engagement is. And of course, how often are we going to be communicating within that engagement. A couple things to kind of talk about too, and to maybe add on as some sort of bonus is what licenses do they have? This kind of falls into the compensation as well as the services, but it's always good to kind of ask that question of what are they licensed to do? That way you're able to know, are they going to talk to you about insurance? Or maybe you don't hear about anything regarding insurance. You don't want that to be like, oh, they didn't talk to me about insurance, I guess I don't need any. No, if they're not licensed for it, they actually can't talk to you about that. So you want to make sure that you understand their legal obligation as well as also their legal restrictions of what they can and can't discuss with you. A good advisor, though, will at least point you in the right direction, I feel like. Even if they're not licensed for insurance, they'll still maybe mention, hey, you should probably talk to somebody about this. But again, hopefully this is helpful. You have a little bit more education and knowledge before you walk in that door, because I want to make sure that you feel as in control of that meeting as the advisor is. They've got some standard questions that they're going to ask you. I've got my preliminary questions I'm going to ask for a brand new prospective client, but you want to have some questions on your end as well. Hopefully this is helpful. Check out our other episodes at the link below. We'll see you on the next one.